This is step by step exactly how I bought a $2 million mansion with less than $0 down payment. Not only that, I was able to take over the seller's 4% interest rate loan instead of buying it with like 7, 8% interest. This is basically the exact same thing I've done to buy over $25 million of real estate in the last 5 years. So let's get right into it. So I was scrolling Zillow. I was looking at Zillow, looking for houses, and I realized something that caught my eye. There was a couple red flags on the Zillow listing. I don't know if you can see it, but I will break it down for you. This wasn't the first time I actually saw this property for sale. I saw it when it was first listed for sale in May of 2022 for $2.2 million. That itself is not the red flag, but what was, they actually ended up selling the property a month later for $1.8 million. That very clearly told me the property is probably worth closer to 1.8 million, maybe 1.9 at the highest. Well, the biggest red flag was less than 1 year later, the seller had the property listed instead of 1.8 million for $2.1 million. Unless they massively renovated the property and made it phenomenal, there's no reason why it should have gone up $300,000 in less than 1 year. This is especially true because in 2022, interest rates were around 3 or 4%. And near the end of 2022, early 2023, they already jumped up to 7, 8%, even higher sometimes. When interest rates go up, people are paying way more for a mortgage than if it's a lower interest rate. So unless they did a bunch of renovations or, something crazy happened, the property should actually be worth roughly the same, if not even less, at a much higher interest rate environment, because people's payments would go from right here around 9-ish thousand to closer to $14,000, $15,000 a month. So what I did was I verified that information. I used a tool called PropStream where I could pull up mortgage info on properties, see when it was sold, what it was sold for, what type of loan they used, what interest rate they got, how much loan balance there was, basically everything when it came to this house. What I realized was this property was basically low or no equity. They originally bought the property using a VA loan. They put no down payment, so their loan was around $1.8 million. Well, most people think that if you buy a property for 1.8 and you sell it for 1.8, you break even. There's no loss. Well, the reality of it is this guy ended up paying probably $50,000+ to buy the property because there's closing costs. And when you want to sell the property, there's probably another $50,000+ in closing costs. You're paying agents, lenders, you're paying all these people. Those are all costs you have to account for. So buying a property for $1.8 million and selling it for $1.8 million does not mean you end up with zero. You probably need to sell this thing for over $1.9 million just to break even. That's no profit at all after all the fees accounted for. Well, so what I decided to do is reach out to the agent. I thought this could potentially work as a great creatively financed opportunity because although they listed it for $2.1 million, they might have been able to sell it and make some profit. The reality was I didn't think it was worth that much. And I basically let them know that at the very beginning. So then when I noticed within the next month, they dropped it to $1.9 million or $1.99 million, they were getting very close to the point in which the seller was going to make no money. They went too much lower. The seller was actually going to have to pay money to sell off the house. I presented this creative finance opportunity to the agent, and he was not very interested in the very beginning. He said, we're going to test the market. We're going to see how it goes. When they dropped the price in June, I realized, okay, that's a pretty big drop. $100,000 means they're probably fairly motivated. And because they dropped the price at the start of a new month, I knew that the mortgage payment was probably something they were concerned with. They were paying this $9,000, $10,000 mortgage payment, plus you have taxes and insurance and other fees. They're paying all this money every single month. There's probably a reason why they dropped the price. They really wanted to stop making these payments. And that's when we were finally able to get on a call with the seller, all parties involved, just me, seller, agent, try to figure out what is going on here. Well, I was right. The seller bought it with a loan that was, basically the full 1.8 million. If he dropped the price anymore, he would have to basically pay someone to buy the house. And if he couldn't sell it for around this price, he was basically screwed. He bought this property and then had to quickly move out of the area. And so he listed it as a short-term rental to not lose money. Well, the reality was the property managers he put in place did a pretty terrible job. And they were not making him any money. If anything, he was losing thousands of dollars a month. He was at the point in which he was no longer going to be able to pay the mortgage. So he was going to end up losing the house to foreclosure, wreck his credit, go into bankruptcy, bought it with a VA loan. So he's going to lose the ability to use that VA loan ever again. So there was a lot of motivation there. He didn't want to wreck his credit. He just wanted to sell the house and move on from a mistake that he made. And if he dropped the price any lower, he was going to have to pay $50,000, $100,000+ to sell the house. He was extremely motivated to get the deal done. Well, what I did was solve the seller's problem. I said, well, basically the situation that you're in, there's only one real solution. I can buy your property. I cannot take out a new loan at almost $2 million to allow you to basically break even. If I did that at 7.5% interest rate, 25% down payment, we're talking about a mortgage that's 10, 12, 14 plus $1,000. I was not willing to do that. It would have never made sense to do so. So I said, basically, what I can do is I'm not going to be able to really pay you much up front on this deal. But what I can do is take over all the responsibility of the payments on your loan. So I'm going to buy the house. The loan will stay in your name. I will take over your 4.5% interest rate loan. Instead of paying $14,000 in a mortgage, I'm paying closer to $9,000. Way better. Save me $5,000 a month of interest all day, all day. And because I was able to structure it creatively, instead of having to put a 25% down payment with the bank to have the privilege of buying the property at a stupidly high interest rate, we basically said that I will make your next mortgage payment because you're going to go behind. But instead of that, that means you're not going to be able to get any money up front. Either way, we were able to solve the seller's problem. He was able to move on and not pay any money like he would have had to if he sold it at a lower price. And he was able to not lose his VA loan, wreck his credit, not go into bankruptcy to move on from this property. So the reason why this thing worked was because I understood strategy. I understood that I can structure a deal that will solve the seller's problem, which was no foreclosure, not paying money out of pocket to sell it. And I was able to take over a phenomenal property that looked freaking extremely beautiful, is extremely beautiful, and make money on it because we manage properties much better than a typical person could. And I was able to take over a super low interest rate, saving me over $5,000 a month on my mortgage of just wasted money on interest. And on top of that, I was able to buy the property with no money down besides paying the very next mortgage payment for him. So then we closed on it in September of 2023. And I actually bought it for exactly the loan amount. So 1.772. So he had it for 1.8. I bought it what the loan amount was at this point, 1.772 at way better terms than I would have ever been able to by just asking a bank, right? The bank would have screwed me. That would have made me put a 25% down payment. So, $500,000 down, that wasn't going to work, right? They would charge me a ridiculous interest rate, meaning I'm wasting thousands of dollars a month. That means I'm wasting thousands of dollars a month on interest to the bank when I could instead just solve an awesome deal because I understood how to do this stuff. It's the same thing I did with this duplex in Atlanta. I was able to buy the property from the seller directly who owned it outright, and I paid a 10% down payment, $45,000. Originally, we were going to buy it for 5.5% interest rate, even though interest rates were in the sevens. But then I was able to eventually negotiate it to 3.5% interest rate. Once again, this was saving me thousands of dollars a month in wasted interest. And instead of putting 25% down payment, right, over $100,000 down payment, we got it for less than $45,000 down payment. That's basically what I do with all the deals that I buy. I buy them using creative financing. I buy properties using seller financing or owner financing, like this one. I buy them by taking over seller's mortgage, what is known as subject to, like this one. Or sometimes it's the combination of the two. I take over the loan and then the rest is financed to lower my down payment. There's other creative finance strategies, but I can't really get into the weeds of all that right now. I bought this one, subject to. I bought this one with the Morby method. We bought this one, subject to. Bought this one, subject to. Bought this one, hybrid, so the combination of the two. I do this a ton because why would I use a bank who's going to charge me way more freaking money, like way more money down payment, way more money in interest? Like, why would I do that when I can leverage creative financing to buy way better deals, way better properties than wasting money with a bank? No, thank you. Here's some brief stuff on seller financing, subject to, and hybrid. But I'm not going to get into any of that right now because it's way too extensive. Instead, I have a free community called Wealth Through Real Estate on the school platform where you get all these courses for free. I've got the tools that I use to analyze properties. I've got trainings for people who are absolute beginners in real estate investing, want to understand the basics of investing the traditional way using banks, as well as all the forms of creative financing, how to, like, what these different things are, like what is seller finance, what is subject to, how do you analyze a property? If you're going to buy it, seller finance, like, what does that even mean? How do you know what the mortgage is with the down payment, all that stuff, plus a bunch of other free trainings in there. So if you want that, I put the QR code right here and I have a link below this video so you can hop into that community absolutely for free and take advantage of all the awesome free resources I provide you. Because at the end of the day, I'd rather have you save money, you buy better real estate, whether it's for yourself, whether it's as an investment. I want you to do that instead of wasting extra money with a bank. Why are we so cool with banks taking advantage of people, charging us ridiculous down payments, ridiculous interest rates when there are alternative solutions out there? That's why I do all this for free, to help you guys out. All right, with all that, thank you. I hope you got a lot of value out of this video. If you have any more questions, drop them down below because it's a pretty quick video. I'm happy to answer anything and everything to help you on your journey as a real estate investor, and or if you're just looking to buy your own house with a way lower down payment and with a way better interest rate. With that, see you in Wealth Through Real Estate.
Sure. All my young.